All right, I'm going to bring him on. So he's been ringing the alarm for years with an incredible informative blog, amazing predictions backed by analytics and research, with articles published all across the Commonwealth. He is a predictor, not a postdictor. I give you guys Martin North. Mr.
Hi there.
North.
Hello there. How are you doing? And greetings to your audience. It's great to be on.
Oh, it's so good to have you on. I've been following you on and off for years now, and it's good. You've been how do you say, ringing the alarm for years. You've been predicting this. You've been analyzing it. You've been up and down and all around with it. You've answered thousands of questions from people. So it's so glad to have you on the show. And before we kick off, how you doing, Martin? You okay?
Yeah, pretty good. I should say good day. You know, in Australia here, it's suddenly very hot here today. So looks as though it's going to be warm for the next few months. We're coming into spring now. And there's just so much to talk about with regard to housing. But what's interesting is the more you look at it, and, you know, you're very good at this. When you join the dots, you can see consistent patterns, whether you look at Canada, whether you look at the UK, whether you look at Australia, right? There are things going on which you have got to stand back and hang on a moment. Why are things the way they are? And I hope we can get into some of that today.
Okay. All right. So now you got the Australian media saying, okay, we're in a recession. Before COVID, we're entering a recession. Now, Mr. North, in your opinion, and with your analytics, how long realistically has Australia really been in a recession?
Well, it depends how you measure it, of course. If you measure the old GDP number, well, that's always a bit massaged, but GDP doesn't measure very much at all, right?
Right.
And in fact, we've been able to survive because we've been pulling migrants in very strongly in recent years. So effectively, we've been blowing up the economy. We've been lending more debt to people, so they've been buying more houses. So that's helped. And we've done a lot with regard to iron ore and things like that. So actually, the top level GDP, not too bad. But if you go down and look at GDP per capita, which is a much better measure,
yes,
then actually we've been going backwards for at least a couple of years. And on all the other metrics, if you look at, wealth, income, all the other things that actually are important, we've actually been sliding for at least a year prior to the virus hitting. So we were already facing into a gale. And then basically the gale got turned to 11 when the virus came through. So, you know, everyone's now blaming the virus for the recession. No. We were already facing into it, right? What this has done is just amplified it, brought it forward, but this was always going to happen.
Okay, you mentioned the September cliff in some of your article I was reading the other day. Go ahead and explain the September cliff to us, because we are coming towards the end of September in a week or so.
Yeah. So once the virus came through, the government announced a whole bunch of stimulus measures and support measures. So, for example, they created a thing called JobKeeper, which basically paid money to firms to stop them laying off some of their employees. That was, you know, in round numbers, about 7 billion. Job Seeker, which was an enhanced payment for people who are out of work, another 7 billion. They also introduced the opportunity to pull out savings from superannuation, so pension superannuation. That's about 19 billion.
Right.
Plus, they also allowed people to stop paying their mortgages. So the banks gave people a mortgage repayment holiday, and that was worth about 3 billion. So you start seeing these big numbers. And basically what's happened is we've had a massive amount of government stimulus come in. At its peak, it was more than 20% of GDP.
That's
okay. That was a large amount, but then it came back down. So in this quarter, it's down to 7.5% of GDP, thanks to the policies being withdrawn. And now next quarter, it's down to about 2-point-something% of GDP. So basically, we're in this situation where all of those stimulus measures were basically tapering away. Now, they have extended a few. The banks, for example, have now been given permission to claim loans that actually are on repayment principal holidays, not as bad up till next March, so they can just go on doing that for a bit longer. They've basically extended some of the support, but it's still a very significant slope if it's not a cliff. So, and my own concern is that it's already too late. We're already seeing the impact of that. We also know there's a number of small businesses who didn't get hold of JobKeeper or indeed Job Seeker are against the wall at the moment, I think about a third of them could actually fall over in the next 6 months, although the government today is announcing they're going to change the bankruptcy rules so that they can go on trading for longer, a bit like the US system. So that will perhaps, try and support things. The problem we've got is all the stuff that the government's done has been short term. We'll get back to where we were 6 months ago and everything will be fine, right? But remember what I said? We were already heading the wrong way before this will happen. So basically, we've got short term stimulation that's being withdrawn. That cliff is really now upon us. And I do expect to see the GDP numbers looking quite sick ahead. Also, unemployment, which actually was 6.8% this last month, which was down a bit. The Reserve Bank still forecasting it to go to 10% by the end of this year, 7% 2 years later. And that's the official number. The real number is a lot higher because if you're on JobKeeper, you're not counted as unemployed.
That's correct.
Right? So the official number, if you take all of the various factors into account and take underemployment into account, in other words, less hours than you want, about 1/5 of the those employed is in that category. So there's less income coming into those guys than previously. So we are really now caught in this huge pincer movement where stimulus is being withdrawn. The virus, though, is still bouncing around a bit. We had a big lockdown in Victoria again a few weeks ago. That's looking a bit easier now. But the international borders are still completely shut. So we've got no migration coming into the country, whereas previously migration was very, very strong. We had more migrants coming in each year than natural population growth. Right. We also had a lot of international buyers, looking at property, or they've gone. And the other thing, of course, tourism, a very big industry in Australia, that's cooked as well internationally. So, wherever you look, frankly, you see more issues rather than solutions at the moment from the government.
Right. Okay, now let's get a little bit of nitty gritty here. Now, I remember discussing a few articles here on the channel about, withdrawals, cash withdrawals, this removal, how much you can, and they want to bring it down to 2,000 from 10 to 5 to 2. Now, usually what happens is, I've seen with governments, is they usually discuss something, then they step it back. Then they reintroduce it, then they step it back, and then they talk about it again, and then they finally bring it up, and then 2 years down the road they say, what? We told you this was going to happen, and then they kind of throw it in that way. Now, this is the question. This is a very important question that a lot of people have asked. So, Mr. North, do you see, because of the amount of, like you said, debt to GDP that's happening, especially with households and incomes and people just barely hanging on, do you see Australia going into negative interest rates?
Well, negative interest rates is interesting because the Reserve Bank keeps saying, "Oh no, we'll never go there." But each time their denials are a little weaker.
Right.
Right. So a few months ago, Phil Lowe, who runs the Reserve Bank of Australia, said, "No, not on our radar." Then more recently, they said it's very unlikely. Right. Mm-hmm. They're going to have to do it. There's no doubt in my mind. The fact of the matter is, we've got interest rates. The cash rate is 0.25% at the moment. The real rate, which is the interbank rate, is 0.1%, right? And in fact, one of the big banks came out yesterday and said that they think that they will take the cash rate from 0.25% to 0.1% next month. So I don't know whether that's true or not, but that could be. The problem is that the monetary settings that we have in Australia, they brought rates down quite significantly to very low levels, is not sufficient to do much, right?
Was it deregulated in the 60s or 70s? Because I remember you guys had a really sound system back in the 60s and 70s. It became derailed, and what happened?
Yeah, so we've got a story to tell here. If you go back long-term trends, right, on house prices, right, there have only been 2 times that we saw significant inflation of house prices above general inflation. The first one was after the Second World War, when there was a massive reconstruction and strong migration. The second was in the 90s, 2000, 2010, 2020, when we had financial deregulation. We had the loosening of lending standards. We had increased competition. We had the banks essentially banking on mortgages to grow their business. Then we had the global financial crisis, and they cut the interest rates by nearly more than 4%, 5% from the Reserve Bank's cash rate perspective. So they've used interest rates to drive the economy forward, get the banks to lend more and more and more. But that's now running out of smoke. The problem I've got is that you can cut rates further. You can go negative interest rates, right? And they might well do that. But it doesn't necessarily work because we've got so much debt in the system.
Right.
We are the most leveraged households from a debt to income ratio in the world. If you look at the BIS statistics. Yeah, well, it's just below that. I mean, it depends on how you measure it. But if you look at debt to GDP, we're number 2 after Switzerland, right? But Switzerland has some unique things about the way that their economy works. So I'm not sure that number in Switzerland is a comparator. So we are right debted up. The other point to make is, this is what people forget, right? There's basically about 10 million households in Australia, right? But not every household is leveraged to the max because debt is concentrated in about 1/3 of households, right? So that ratio of 190 to 200, right, doesn't tell you the full story. What it says is that those who have the mortgages are about 6 times leveraged relative to income, right? 6 times, right? And in fact, the banks are still lending loans to some people at 7, 8, 9 times income. Right?
Yeah.
So we're still going there. And people will argue, well, that's easy because rates are really, really low. So therefore, the repayments should be lower.
Right.
But if you look at the actual physical amount that people are repaying, it's actually no lower than it was a decade ago. Right?
And they're paying it off 3-4 times as opposed to twice.
It's crazy because essentially what it means is that you've got that group, that cohort, that 1/3 of households who are leveraged to the gills, right? And interestingly, a proportion, about 12% of them, are now not paying interest or principal repayments because the bank's gave them a repayment holiday. So we've got that issue. We also know that a good proportion of them have had income compression over the last few months. In fact, no income growth since 2012 for many down here in Australia. So what it means is that we've got a lot of households who are right up against it, right? Now, I measure a thing called mortgage stress, right? Which is a cash flow measure of money in, money out for those with a mortgage, right? And that went from 32% of those borrowing to more than 40% either side of the virus. So now we've got 40% of households who are right on the edge. Now, that's important because it doesn't necessarily on day one translate to mortgage defaults, but long term it does. And I'll give you an example. Over in Western Australia, there's a postcode over there called Mandurah, right? And Mandurah is down on the coast south of Perth, right? And we saw the mortgage stress rates rise about 4 or 5 years ago, right? And since then, house prices there have dropped 38%. Around 1/3 of households are in negative equity. And we've got high levels of mortgage defaults following. So stress is a leading indicator, defaults follow. And I worry that what we see over there is now what we're seeing in many other locations across Australia. So we are close to the wind at the moment.
Well, Perth experienced that about 7 years ago with the mining bust, right? Perth you had homes go up to 900,000 900 large, and then they went pretty much bust when the whole mining sector went bust.
Well, at one stage, Perth prices were actually akin to Sydney prices, right? And everyone's saying, oh, this is marvelous, right? But it was all driven by the mining boom. Then the mining boom stopped, and we've seen this steady ebbing of prices in Perth. And it's interesting. Every year, the real estate agents over in Perth, through their local branches, basically say, we're just turning the corner, right?
Yeah, they've been turning the corner for 4 years.
Correct, exactly right. And guess what? No corner yet. We're still going in the same direction. I did some work quite recently for one of the people that I've been looking at property for quite recently. And there's a consistent slide down, right? Houses and units. And guess what? This is the really killer bit, right? The government announced a stimulus package measure as part of the COVID response, right? So basically, there's a thing called Home Builder. So they'll give you money to go build a homeland package, right? The state government also added to that. So you can get $55,000 from state and fed, right? And you can go get a homeland package, right? Over in Western Australia. Now, here's the interesting question for you. How much do you think the price of homeland packages went up when that was announced?
20%?
$55,000. So the amount of the grant was immediately factored in to the price of the homeland package, right? And that now has distorted new property construction. So people are preferring to do that. And it's depressing house prices in the surrounding area of existing property, right? And this is a classic example of stimulus packages don't work. All they do is
adding more inventory.
Adding more inventory, lifting prices, and basically it's a zero-sum game. And yet, the housing sector, the construction sector are all saying, you have to do more, you have to do more, right?
Yes.
And just be clear on this. Those stimulus packages are designed to support the construction sector, right? They are dressed up as providing housing affordability support, right? But in fact, it's a zero-sum game, and there are so many people getting bounced into these new homeland packages. They've been running out over in Western Australia. They're going to do it elsewhere as well. But these stimulus measures are just still fueling the same old debt-driven fire. That's why home prices are so high relative to income. That's why we've got all the significant pressures in the economy. And I keep saying you can't just sort of recycle the same strategies that they've done for the last 10 years.
Or build yourself out of this.
Yeah, no, exactly right. And remember, migration is zero. So demand is way down from where it was, right? Property investors are losing their shirts because essentially the rentals that they can command are fading, particularly in Sydney and Melbourne.
Oh, the great entrepreneurs that rent out to students. The entrepreneurs, yes.
Exactly right. And particularly high-rise units, of which there are thousands and thousands vacant, right? So the vacancy rates are very high, the rents are going down, and capital value is falling. So actually property investors are losing their shirts left, right, and center. So we've got no inward migration, less demand, property investors looking to sell. The only people who are actually in the market are these first-time buyers. So, of course, they're cannon fodder for the government, right?
Of course they are.
With all these stimulus packages. But it's just replicating the same problem. It's not solving anything. It's just continuing to make housing affordability ever adverse. And look, the average price of a house in Australia is 3 or 4 times what it is in the US, right? Just
a
for
lot
people
more.
to understand.
Because I could don't make me show you what you could buy in West Palm Beach for 130 grand.
Right.
Okay, Mr. North,
Yeah.
I got this. It's going to add kind of this next question ties into what you've just said a little bit earlier. I want to ask, what else you could come up with that the government might add from his toolbox of financial tools? What else could they throw at this? They've already did first-time home buyers loans. In Canada, they've done first-time home buyers loans. I know they did in Australia. I know they did interest-only mortgages, which are coming up for renewal. And then they did, what was that one other one they did? They did first-time borrower, this, and then they did a couple, 100% LTV. They did 100% loan-to-value. They did that in London for a while. Now, what else could the government throw at this?
Well,
what's left besides negative rates?
Yeah, so if you assume that they're going to use housing to try and drive this forward, right, then lower interest rates, bigger mortgages, longer term mortgages, all of those things are on the table. The problem I've got is none of it's going to work, right?
Right.
Because we've got to the point where we're debted out, right? And as I've explained, there is no underlying demand to support where property prices are. Property prices need to adjust down. They need to come back to more realistic levels, because what we're doing is we're just perpetuating this bubble. It's going on and on, getting bigger and bigger. And when it falls, as it will, the bang is going to be ever bigger. What the government should be doing is focusing on investment in the business sector, investment in new businesses to create
Private sector
new value creating jobs, right? Not just supporting the construction sector, but investing in our future. We have very narrow-based economies here. We have basically the mining. They're sometimes called it's the houses and the holes, right? The houses we've talked about. The holes is the mining sector, right? So they're digging stuff out and flogging it to China, right? And just remember that China. At the moment, of course, the relationship between China and Australia is extremely shaky. And as a result of that, some of those trade connections are getting rather constrained at the moment as well. So we are completely reliant on that relationship. We don't have a broad base in our economy. So we should be building the base. We should be investing for the future. But no, the government is just throwing more money at housing. It's just throwing more incentives at first-time buyers. And my concern is that this takes us into a complete cul-de-sac.
In Canada today, they had a throne speech with their great leader, and basically he stated that they're going to be creating more public sector, more government jobs. That's the last thing we need is more government. Okay, Mr. North. Now this goes to the next question. You were kind of touching on it a bit from the last answer there. How much percentage-wise is needed for the average wage earner to enter the housing market in Australia. So the average wage earner, I guess, would be anywhere from 68 to about 98,000 a year. And they're having a really tough time getting into the property ladder if they don't use these programs. How much percentage-wise? I'm gauging here in Vancouver, where I'm close to my major city, we're looking at a 51% correction for any one average wage earner to get in. What about there in Australia?
Well, if you wanted to come back to long-term averages, right? I think it would have to be at least 40%, right? More in some places, so a 40% reduction, right? In some places, though, close into Sydney and Melbourne, the multipliers are even worse. And the problem is that there's been no, as I said earlier on, no income growth in real terms, right? And now, of course, incomes are being even more constrained at the moment. So that gap is getting bigger and bigger. The other point, of course, is it's harder and harder to save. So if you want to save for a deposit, with interest rates now very, very low, right, if you start saving, you don't get any growth in your savings. So that's the other sort of captured point about here. So you take savings and you take income, and, long term, there should be at least a 40%. And I've been quoted a few times to say just that. If you really want to get back to central, mid growth over a long-term trend, it has to come down 40%. Now, it won't be uniform at 40%. There'll be areas where it will be higher, areas that will be lower. But we are still way above long-term trends. And of course, everybody argues Australia's unique, different. It'll never happen, right? It's like we are in this unique Alice in Wonderland world where the rules are different, except I'm not convinced it is. So look at what happened in the UK, look at what happened in Ireland. The financial crises that triggered a fall in house prices didn't trigger it on day one, right? Mm-hmm. It actually took 3 or 4 years to work through. So, right. And if you look at the peak of defaults in the US last time, they actually hit in year 4 when prices are already slidden, right?
That's
so
correct.
My argument is we are in for a correction in the home prices. The question is how far and how fast they will fall. And they will be supported by government initiatives to try and keep this whole bubble alive. The Reserve Bank will throw liquidity at the banks. The banks will try and throw more liquidity at households. So just to be clear, the answer to too much house price debt and high stress is offer more debt.
That's
perfect.
Right. I have a little saying I said on the show many times. My son asked me the other day, Daddy, how come they don't put more fuel in a spaceship to go further? They go, well, son, the problem is they're going to be carrying fuel to carry more fuel, and it becomes useless. And it's like our debt system. We're just going to be paying more debt to pay off more debt. It gets nowhere.
Well, that's right. And of course, it's interesting now, the government has provided via the Reserve Bank huge liquidity to our banks, right?
Right.
But the banks are having difficulty in lending that on. So at the moment, basically, the banks are saying, well, we can lend to anybody. So they've reduced their lending standards. They're offering interest-only loans. In other words, they are now back into high-risk lending strategies at the time when households are really being caught by high unemployment, high debt level, and no income growth. What could possibly go wrong?
Okay, Mr. North. Okay, now we're gonna get a little semi-analytical here, but a little bit more. Let's technical question. Okay, there's an article here in Canada, and I've addressed it several times. And it says that Canada would be in a recession if it wasn't for money laundering. And this is from a reputable source here in Canada. Now, my question, Mr. North, would Australia be in a recession if it wasn't for money laundering? Hold on. Shadow flipping, the casino scams, all the stuff that's been happening. Shadow flipping is very dangerous. And if we talk about it too much, we might be a target. But would Australia have been in a recession earlier if it wasn't for money laundering?
Well, it's hard to know, of course, because there's very little disclosure here. What we do know is that the amount of information that is actually caught about the individuals who are buying property is very, very low in Australia. Okay. And very few questions are asked about where the money comes from, right? Now, I know that they have know your customer rules and anti-money laundering rules. But interestingly, today, one of our big banks got fined 1.3 billion Aussie dollars for the AUSTRAC. Basically, they weren't doing what they should have been doing with a lot of international transactions. So we have a rather limited lens, I think, on what's going on. The other thing is that, there have been pushes over the last 10 years to provide more rigorous controls of the way that properties are actually transacted and the flows. The industry and the government have both resisted it. Right
Well,
now,
Mr. North, here in Canada, there was a team that was put in place to actually start breaking this down. And from 2011 to 2015, they found $210 billion flipped through Canadian real estate, and most of it was shadow flipped. And this is not your typical layering that the mafia does. This is more just selling homes back and forth to two different corporations and cleaning more money in the system. And then after our great leader stopped this investigation dead in its tracks, and we don't know, we only got is 210 billion. And now I wanted to ask you, okay, this is a really tough one. Is there enough, or has there been enough foreign investing in Australia where that if the Australian proper, or the Australian, the regular Joe Donuts that works day to day, if he defaults on his mortgage, that there is enough of a crater of foreign investing already that it wouldn't really affect the housing market so much?
Well, I think that the foreign investing in the housing is overdone, right? I mean, there are clearly areas where there's a lot of it, but actually it's by no means the major reason why we've got what we've got, which is essentially too high prices, as we've discussed. That's been a domestic issue. It's to do with the stimulus measures that have been put in place for a long time. I think that the foreign investment is a critical component, but not the massive issue that, frankly, often the press picks up as being the problem in the property sector, right? You know, if foreign investment wasn't there, everything would be fine. I don't think that's true. I think it's a convenient scapegoat, frankly. And of course, now foreign investors are actually walking away. They've actually selling rather than buying property. And a lot of that was actually Chinese money that was coming through previously. Again, interesting to note, though, that actually, if you look at it in sort of origination terms, there's more money coming from the US and the UK than from China for property. And yet the stories in Australia is always Chinese buyers buying property in Australia. It is weird how it's been sort of positioned. So I think this is probably an issue that's important, but it's actually not as significant as many people are actually playing it up to be.
Okay, because here in the city of Vancouver and the city of Toronto, a majority of the major investments are under corporate numbers, and those corporate numbers usually tie to foreign entities. Now, Vancouver, British Columbia added the foreign buyers tax in the tail end of 2017, and everything kind of died down, and we got a sort of plateau across the line, but then Seattle, King County, which is a 2-hour drive from Vancouver, saw this huge spike in foreign investing, and the articles from down there, foreign investors are skipping Vancouver and going straight to Seattle, and King County in the city of Seattle saw 18% year-over-year gains in their real estate, and they're blaming it on the poor tech workers. And I spoke to a tech worker in Seattle the other day. There's 11 of them living in a 2-bedroom apartment because they can't afford it, and they're blaming the tech workers for it, and they're seeing enormous amount of a takeover there. And I'm trying to figure out Australia, because I'm figuring it would be like here in Vancouver. I'd figure it'd be almost the same thing because you guys are closer. So,
well, yeah, I'm not sure. You see, I mean, the official numbers are always fudged. We know that, right? There's a thing called the Foreign Investment Review Board, which was meant to be policing this and didn't do a very good job. And they have certainly put taxes on foreign investors buying particular types of property. And in Australia, they were only meant to be buying newly constructed, not existing property, although that was always fudged a bit too. So I suspect that the true situation is worse than the official data says. But I also don't believe it's the number one issue that's causing all the problems we've got.
Okay, understood. Okay, so we are headed towards spring. You're headed towards spring. I'm sorry. I'm headed towards winter. You are headed towards spring. You got your air conditioner on. Are we going to be seeing a spring rebound that all these realtors in Australia are forecasting? This major spring rebound. Get ready, and are we going to see this?
I don't think we will. What's interesting is the stock levels through winter were always higher than normal.
Okay.
Right, so there are people, and there are some people now. Looks as though they are wanting to sell. My surveys say that some property investors are looking to bail before property prices fall further. So that's one reason why there will be more listings. We also know that what I call my down traders, so these are people who have held property for a long, long time, maybe with no mortgage now, are looking perhaps to sell to release equity before prices fall. So it's more being driven by the expectation of falling prices rather than actually, great time to buy. The other factor, of course, there is we've got these payment and principal interest repayment holidays. The banks are now calling every single borrower on those holidays to work out whether they can actually afford to start making those repayments. But the conversation, according to people who report back to me, so in some cases, the banks are now encouraging them to put their property on the market because the bank doesn't want to foreclose. But if they can persuade the borrower who's in difficulty to sell and get out, then the bank wins. And of course, it doesn't then count as a bad loan. So those are the factors that are actually supporting the market. But the truth is there is very little evidence of a sustained rebound in prices. In fact, I think prices are falling. There are pockets, particularly at the top end, where there are always prices that are actually behaving. But here's the interesting question. How do you know what's going on, right? We have a number of property portals here in Australia, right? But those property portals have suddenly started to not disclose the prices when properties are sold. They quote the last asking price, interestingly, right? And if I then do some analysis to look at when the transactions were settled, because you can get that data from official sources, guess what? The prices that they are reporting on their portals are higher than the official prices once transacted. And if you actually compare the two, some portals are just dramatically off where I think they should be. So we've got this situation where the portals are portraying a situation that is not real. The other point is a lot of those portals are owned by media companies.
That's correct.
Right? Who have TV stations and publish a lot of stuff online. And we get article again and again and again, all these examples of prices sold over reserve and now's the time to buy, first time buy. It's like you wouldn't believe the propaganda that's out there. It's all trying to support a weak market, right? So I see very little evidence of price growth. Now, interestingly, a couple of months ago, CBA, one of the big banks here, said,
yes,
we think prices will fall up to 32% over the next year or two, right? Because of the crisis after the virus. They've turned that on their head now, and they're saying, no, we were wrong. We think it's going to go higher. And another bank came out and said, 10 to 15% higher over the next couple of years. Although Fitch ratings came out this week and said, no, down at least 10%, maybe more. So there's a massive disconnect between those with vested interest in talking the market up, the banks, right, and the property portals, and some of the more objective independent analysts who are still saying, no, we're not seeing it. Think prices are going to go down rather than up. But we'll see. Maybe I'll be wrong. But my long-term analytics says property is overvalued relative to all the fundamentals in Australia, way over. Supply and demand is completely off kilter. We've got 1.2 million spare properties in Australia, right? 1.2 million spare properties, which means we've got way more properties than we need. We don't need to build more,
right?
But there's still another 200,000 being constructed even as we speak, and building approvals are down, but there's more supply coming on, less demand. Why would prices go up?
Now, Mr. North, I think it was 3 or 4 years ago, I made a video on my channel called the Sydney Brain Drain. And I was talking to people, when I was starting off my channel many years back, and they were discussing that, yeah, Mike, you're right. I have a decent income. I live in Sydney and it's getting expensive. Now, what this damaging effect of the youth or the educated or the people that actually contribute to the infrastructure that are leaving these major cities because of affordability levels, because they're not going to stand around and work 10 years to put a down payment on a house. Where are they going? There's Melbourne's got this mass exodus and they have to close down the state because of the virus. Then you got a lot of huge brain drain in Sydney. A lot of people, I know they went to Hobart. A couple of people went up to Perth. Where are these people going? And what are the effects of what's going to happen when you don't have that blue collar or white collar taxpayer that contributes to the infrastructure that's no longer going to be there contributing? What would happen?
Well, I think we're in a very interesting situation. So suddenly virtualization has really come of age, right? And I guess the virus was part of that. So we're seeing significant demand now in regional areas relative to the closer into town. Previously travel distance was a critical measure. It's less so now. So for example, there are some people in Melbourne who are looking at Queensland thinking, well, maybe I should go to Queensland, and some of them buying virtually, without actually looking at the property. First point. Second point is that if you are actually able to work remotely, you don't need to, go close in. But the third point is prices close into Sydney, particularly units, are dropping dramatically, right? There are some postcodes within 10K radius of the centre of town that are down 30% from where they were. So we are already seeing some of the impacts of this weird situation in property. So people are actually buying in different locations. They're buying different types of property. Houses are still commanding a premium over units.
Right.
But what we are seeing is a lot of units for rent close in where the rents are down 20, 30 or more percent. So it's cheaper now to live closer in. But you also mentioned Hobart. Hobart's a really interesting case. Very small centre relatively. Prices there were booming until recently. In the last quarter, rents dropped in on average 9% in Hobart.
Right.
We are.
I think that's a boomerang. I think I'm going to tell you why I think that. I think it's a boomerang effect of the people that went out to Hobart to give it a try, and now they're moving back in with mom and pop in Sydney or Melbourne, right? So that's what I'm thinking is happening, is that boomerang effect. But what about the public servants? Like, what about firemen, ambulance drivers? I hear horror stories of, for example, people in California, they have to drive 2 hours to their destination every day just to drive an ambulance around and then go back home. How is the infrastructure going to be supported? Like, who's going to support? Who's our mechanics? Our people that keep this going, picking up our garbage? Who's gonna, No,
it's a big issue. Certainly close in, even people like teachers, for example, have issues and have to travel long distances or live in shared accommodation. I mean, this is the point about housing affordability, right? It hits a very significant proportion of really, really important people with important jobs, even like nurses, right? For example, it's weird how we don't seem to value those sorts of capabilities, and we actually don't have structures in place to enable them to live closer to where they actually need to live. It is a complete distortion, but it's distorted because the market has been let rip, thanks to what the Reserve Bank has done, thanks to what the government has done, thanks to the fact we've been banking on housing to save the whole economy, right? The collateral damage is remarkable. And in fact, as a result of that, people either have long commute journeys or just decide to up stumps and move somewhere else. And that's part of what we're seeing. So, and interestingly, if you go into the center of town in Sydney or in Melbourne at the moment, it is so quiet, right? Because nobody wants to go in to the center of town. So we've got this massive shift going on in terms of demographics, in terms of lifestyle, in terms of property use. Interesting observation there. It's hitting the commercial sector really hard,
yes,
right?
It is.
And this is the story that people don't understand. I think the commercial property sector and the small and medium enterprise sector will be the first areas to really be exposed by what's going on at the moment. The housing sector will follow, but it will be slower.
Here in the commercial sector, it's kind of weird. It's bizarre, actually. There's some people in some Canadian major cities that are just an average sized restaurant. They went from paying $38,000 for property tax to $58,000 to $126,000. There's one guy in downtown Toronto in a decent area, and his place is one story. It's nothing major. He's paying $239,000 a year in property tax. And he's just closing up his doors, and now with COVID, and we're seeing are you seeing the government's remaking or trying to refill their coffers by raising taxes on the middle class more and more? Are you seeing that kind of?
Well, there's actually talk about tax cuts rather than tax raises at the moment. So basically, the government strategy as a budget in 2 weeks will be to pull forward some of those tax cuts to try and encourage people to spend more. My issue here is that consumption, which is about half the economy, right. has really gone through a roller coaster. There was a significant rise as people, bought some things and bought less of other things. Then it went down, then it went up, went down. But actually, household consumption is caught with this high debt load that people have. So my own view is that trying to encourage more people to buy more stuff ain't going to work. Putting extra taxes into the system at the moment will just be a further drag, and most of the commentators here in Australia are saying, well, the government will have to run bigger deficits for longer. Luckily, interest rates are very low, so of course they can afford to do that. There isn't much talk at the moment, officially at least, about lifting taxes. But you've got to ask the question, with all this debt that is being, developed by central government and state governments at the moment, who's going to pay that off? At some point, debt has to be repaid. That's the whole point about,
right,
the way that the system works. So debt is there. Now, it can be rolled and rolled and rolled at very low rates, but it doesn't go away. So I suspect that down the track, there will be a moment when taxes will have to start rising, where in fact people will have to start paying, and it will be the middle class that gets squeezed.
Right.
Because by definition, the guys at the top, well, they're always okay. They can manage their affairs and pay almost no tax anyway. The guys at the bottom don't earn enough to actually pay much tax. So you've got the clump in the middle. So my own view is we're going to see a huge compression of the middle class, not over the next 12 months, but over the next 3 to 5 years.
Okay, Mr. North. Now, getting into debt, let's talk about now, there's been a lot of, let's say, local banks have been getting into a lot of trouble, and there's a lot of bad deals on the books. Lots of people are being lent money that shouldn't be lent money. Now, my question, Mr. North, is who the heck is underwriting these deals and approving them? Because it goes to the lender takes the application, pulls the credit score, goes ahead and looks at the deal, see if it's worth doing, and then they go ahead and send it for underwriting to approve. How are underwriters approving these deals? Because we can't blame the consumer too much, because the consumer, like a lot of people in school, don't understand some of this banking and what you need to know when you go in and what to look at a credit score, your beacon score, gaps on files. They don't know that stuff. So they depend on their local banker to help them and find them and suit them with a product that's going to long-term help them through their lives and potentially be a good asset. But nowadays, they're approving left, right, and center. And the problem with that is, who the heck is underwriting these deals? Because if you had an auditor go in there and look at some of these mortgage files, they'll be looking at them and saying, who the hell approved this guy? This guy's total debt service ratio is like 100%. And then it's been surfacing, falsifying incomes, falsifying even credit scores, underwriters asking the lender to ask specific questions on why this is happening, and lenders going ahead and lying on their own just to help the customer get a mortgage. Now, what do you have to say to people that are in this situation that they shouldn't have gotten in from day one?
Yeah, it's a tough one. That, I mean, the Royal Commission, we had a Royal Commission into banking and finance a couple of years ago, and that revealed a whole horrible caseload of stuff where people were actually being fraudulently given loans, where effectively records were being masked and changed. We got lots of different moving parts. We know that in some cases, the applicants are not necessarily 100% truthful as to what loans they've got and what their financial position is. So that's part of it. We also know that there are mortgage brokers in the middle who've actually been messing with some of the information and positioning in a particular way. We know that within the banks, the underwriting systems are not as robust as they should be. And so some people basically got loans they shouldn't have got. And then you've got other institutions around the edge who all hangers on, all clip the ticket on the way through, who just want the transaction at any cost, right? So there is a mass set of motivations to write more loans. And of course, the argument always was from the banks were, well, that's fine because property only ever goes up and incomes are only ever going to go up. So even if it's difficult today, right, down the track it'll be fine, except now we've got higher unemployment, property prices are falling, incomes are falling. And the other point is that the assumption that most people who get a loan from the bank is, if the bank says I can afford the loan, I can afford the loan, right? So they basically rely on the bank. Now, my argument is you should never do that. You should do your own calculations. You should do your own cash flow, because often the bank will be able to offer you a bigger mortgage than is safe for you to take. Now, we have a thing called responsible lending here in Australia, and responsible lending basically said it has to be in the interest of the customer to get the loan, right? Well, actually, what it said, it shouldn't be in against the interest of the customer to get a loan. They've started to change it a bit. But what's happened now is the regulators said, no, don't worry about responsible lending for now because of COVID, right? Just keep lending. Right. If you interest-only loans, which were criticised in the Royal Commission,
right.
Carry on. Switch to interest-only. That'll be fine, right? Because everybody's just making this up short-term, right? So we've got big questions about where does accountability lie for all this? How much of it is actually on the behalf of the individual who took up the loans? They should take some accountability, clearly.
Right.
But a lot of it is the system, the processes, and here's the killer. The Reserve Bank is providing liquidity to the banks, to support the banks, to ensure financial stability, right? So this is all about financial stability. It's not about what's best for the customer. Net of that is high debt, high house prices, low affordability, and supremely risky situations for many households across the country. And I keep coming back to, this isn't going to get solved in a few months. This is structural. This has been going on for 30 odd years. It's been building to this, right? And so the only way to get this fixed is to, one, recognize, wake up and understand what we've got. Almost nobody in official land wants to recognize. They all want to just extend and pretend, right?
Great, extend and
pretend. Two, think about alternative policies to begin to get housing affordability back to where it should be. And I think the third thing is we need more public housing. There is almost no public housing investment being made at the moment. So we've been leaving it to the market. The market has proved to actually benefit the big end of town, the banks, who've actually reported up until now very significant profits at the expense of individual households who are struggling with these mortgage repayments. And we're now, it's crunch time, right? And they can probably extend this a little longer, but it's not going to be able to continue. There has to be a point at which we wake up, change direction. And I just wish that the politicians, who really should be there for our own interest, not their own, not just to get re-elected, but to think about, how to make Australia even greater ahead. No. They're interested in getting re-elected. They will do the tactical things. Housing affordability is the number one issue that we need to solve, I think, in Australia. And unfortunately, there's nobody with the appetite to tackle it.
It's kind of interesting because southeast of you guys in New Zealand, they are entering into an election year this year. And Jacinta Ardern, her platform originally got her elected, and Phil Tyford, who was the housing minister there, was all about housing, the middle class. We need Kiwi builds. So they were going to build 100,000 homes, and there was going to be a big deal, and New Zealand was going to get back on track, and they only ended up building 13 homes. So what does Australia have in mind to actually do something to tackle this? Do you know? Do you know anything?
Zero. There is zero plans. And that's the point. There's no plans. It's basically extending and pretending.
I mean, they're not even making up a plan to get everyone excited?
No.
Really?
Not on this. I mean, they'll probably, in the budget, they'll probably a bit more. I mean, they've done a few things. I mentioned home builder earlier on. Housing it's gone really quiet, right? Mm-hmm. Nobody wants to talk about housing affordability. Nobody wants to talk about the high debt load. Everybody wants to blame COVID for what's gone on, and what they want to do is to take us back to where we were before COVID hit, as though that was nirvana, right?
Nirvana,
The point is that the seeds of the destruction of the housing sector were laid 20, 30 years ago through bad policy. It's just been repeated and repeated and repeated. And nobody wants to take the strategic decisions they should be taking because it's not in their interest to do it, right? Mm-hmm. Because who's going to get voted back in if in that house prices fall? Interestingly, last time around, the Prime Minister, in one of his last speeches before the last election, promised that house prices would not fall under his government, right? Mm-hmm. So it'd be interesting to see whether he says the same again when the election comes around.
You're talking about your friend Scotty Morrison.
Correct.
Okay.
Yep.
And here in Canada or the United States, we usually call it kicking the can down the road. So they're kicking the can down the road just to hopefully patch things up as they go. And and
Yep.
kicking it down and further down, and hopefully, and that's what these politicians have been doing. It's clear as day, especially with the Mickey Mousing the banks have been doing. Especially the Royal Commission went in there and they barely scratched the surface. There was all kinds of horror stories coming out of there where people that have been deceased for 10 years are still being charged fines on their bank accounts and not contacting the next of kin to take this money. It's disastrous. So now, what do you see? Do you see a digital currency coming in? Like, I know we discussed negative rates, but for them to impose negative rates, they're going to have a digital currency so you don't see a runoff on the reserves and people removing their money from the bank accounts. Do you see the death of fiat, and do you see some sort of digital plan ledger thingy coming into light?
Well, interestingly, the Reserve Bank in the last week published their latest and greatest thoughts on the central bank digital currency, right? And they basically said, well, it's not something we intend to implement anytime soon. We are watching what's going on, et cetera, et cetera. But there was a little interesting clause there that they said, interestingly, some people have suggested that actually negative interest rates and digital currency could help in the context of monetary stability, right?
Help.
So they've sort of indicated that it could be something that might be worth considering, but they've not really taken it much further. The fact of the matter is we are in the situation where I think that there will be further inroads into a digital currency, because the main thing they're worried about at the moment is lack of control of Bitcoin and those other cyber currencies that are around there. They're trying to advocate a stable coin. They're trying to advocate a centrally backed digital currency of some sort, but it's very, very early days here. So I don't think it's a central strategy from the Reserve Bank yet. But your point about negative interest rates and cash is dead right. So there was a ban on cash transactions above 10,000 Aussie dollars that was actually being proposed a year ago. We actually tried to oppose it, and that's gone very quiet now. The reason we opposed it was because of what the IMF paper said, which basically was, bearing in mind in 2008, rates had to go down 4 or 5% to be able to actually provide sufficient stimulus to pull the economy out of the last financial crisis. Now, with interest rates very low, you have to go negative, and you have to go negative 3 or 4% to make it work. The only way that can work is if you stop people taking cash out of the system, because if you take cash out of the system, then negative interest rates won't work. Therefore, you've got to try and lock that system, right? And so the cash ban was seen as step one. A digital currency could absolutely be
Part two.
Step two. And in some other countries around the world, and I've seen a number of people speculate that could be potentially on the agenda. But in Australia, at the moment, there's very little signs that that's on the immediate agenda. But longer term, to go back to what we said, with negative interest rates probably coming, and probably that's negative interest rates between the bank and the central banks rather than actually the retail rate.
Right.
Although in Europe, there are a few countries where now there are people being charged to hold deposits, right?
In Germany, anything over 100
Yep.
large in the bank
Yep.
account in Germany, you're being charged. So people are keeping
Correct.
a balance of 99,000 euros.
Yeah.
And I think it's Germany. And there's another country that if you have more than 40 large, they're charging you. So people are keeping a balance less than that. So
Yeah, exactly. So it is definitely at the worst end of the spectrum. But think about it. Negative interest rates turns the whole question of credit and debit on its head, right? It also makes savings. Well, why would you save, right? Because effectively, if they're going to take money off you for saving, then you're going to go more into debt, which takes us right back to the debt machine. The fundamental debt machine of Western economies, right, is more debt, more debt, more debt, right? Who wins? The financial system.
They do.
Right? Who loses? The people who have to pay back the debt. Remember, neoliberalism says, right, and we are in a neoliberalist world, the debt is your problem. You have to pay the debt back, right? And it's down to those people who are basically in the debt system, right? It's a system. It is designed specifically to support a larger financial system, more growth. It's bringing forward demand. But the consequences for individuals and households is dire. And I just don't think that people get it, right? What I'm worried about is that people just think that debt is just the way to do it, right? It's like Isn't that the way, with rates so low? Of course, I should get more debt. But you've got to think about the consequences, right? Debt has to be repaid. And frankly, what you pay on the debt is a part of the question, but you have to repay the capital too. And it's the capital which is going to be the killer for many people.
Mr. North, what would happen if a Ronald Reagan type situation walks into Australia, where to save the country, we're going to have to raise interest rates to 8, 9, up to 13% in some cases. And Ronald Reagan was backed by a lot of his constituents on that, and they needed a reset back in the early 80s. What will happen, Mr. North, with a Ronald Reagan type situation in Australia?
It'll never happen. I don't think we'll ever see rates go up. I think we're in a one-way street. Rates have come down. They will stay down for a long, long time. There's a big debate about inflation or deflation, right? And of course, in the Reagan era, inflation was the problem. I think it'll be very, very unlikely that we're going to see anything like that level of inflation. If interest rates were to rise, then people will just collapse. It wouldn't need 8%, just 2 or 3% above where they are. They would be out now, right? So we are in a situation of ultra low interest rates, probably for at least a decade, probably longer. Doesn't help savers. It doesn't help the broader economy necessarily, because inflation, I think, and you've got to look at Japan, got to look at Europe, right? They've been at QE longer. They've been at trying to make the economy work. Japan has bought more assets than almost any other central bank, right?
Yep.
And it's still not working. There's still a
zombification
environment. Yeah,
there's
and
zombies.
That's the point. Yeah, and I feel that is more likely the direction that we're going in as an economy. So I know that there are many people who point to money supply rising and say, see, inflation. No. Money supply intrinsically doesn't necessarily lead to inflation. It's what happens to that money afterwards, right? And so my concern is that the concept of very high interest rates and inflation, an inflationary environment, which many people who are aligned to gold and other metals are very keen to talk up, right, are missing a lot of other factors. And I think it's a much more complicated situation. I said to people, I don't know. I don't know whether the inflation is the future or deflation is the future. There are too many contradictory things. But I just don't think we're going to see high interest rates anytime soon.
Okay, because that would be actually that's the nail in the coffin that would actually reset the economy if they ever raise rates, right? That's the one tool in the toolbox that bankers and banksters and don't want to touch. That's the one tool that's the do not touch tool that you cannot touch in the toolbox. Now, I want to kind of talk about a little bit about the vacancy rate, empty homes. Okay.
Yep.
Paris, France, got really sick and tired of seeing their empty city turning into an empty shell, where they imposed a vacant home tax. Then they didn't get the results they needed, so they went ahead and actually threw 60% vacant home tax in Paris, because they were sick and tired of I think it was 40,000 homes were in the city of Paris were not connected to the hydro or the electrical grid, and that became a major issue. And they were sick and tired, so they raised vacancy tax to 60%. Does Australia have a vacancy tax now?
There was a little bit down in Victoria, so there was a quite a long campaign to try and actually do that. In many other cases, no. And we know that there are a lot of properties bought by, including international buyers, who bought new property and have never actually lived in it, never actually rented it out. It just sits there in splendid isolation as a long-term hedge, right? So we know that that's the case. And in fact, some people have done some very smart work to measure things like electricity and water, usage. Mm-hmm. And it basically proves that maybe up to half in some of those high rises I've never actually used. So that we've got a huge vacancy issue. 1.2 million properties across Australia vacant is the best estimate, right? Okay. Which is a huge proportion of the total. And bear in mind there's 10 million households, right, in Australia, so you can see.
But that drives up rents. That drives up rents, and then yep. Basically it inflates bubbles, and then yep. the Australian proper that contribute to the infrastructure are left scrambling and just to pay shelter. You know.
Correct. No, you're absolutely right. So it is a fundamentally flawed element. But remember that the reason it's done is build more stuff, right? We have to keep building more stuff. We have to keep build more high rises. We have to, because that's been the economic driver. There's a million jobs in construction. So we need to build more stuff. Right. Now, my argument is, we should be building different stuff. We should be building infrastructure, investment for the long term, not just more cheaply built, poorly constructed high rise that's already falling down in places, as you'll see if you sort of think like Opal Tower and those
Mascot
sorts of things,
Tower,
right?
Opal Towers,
Yeah, exactly. I mean, we've already got too many horrific stories of very poor quality construction, including use of asbestos and those sorts of things, which should have been banned but probably weren't banned. And all of those factors there are basically, again, distorted the market. And the other point to make is a lot of those high rises, which are vacant, right? There are as many property investors who also bought those high rises who now can't let them out, can't sell them, so they're stuck with these assets that are worth a lot less. How do you value something that is not basically lettable? I mean, that's part of the issue, right? So this is another lens on the stupidity of the strategy in Australia, which is build everything, build more stuff, it'll be fine. No, we need a different plan.
Mr. North, in LA County, Los Angeles, the empty home phenomena is so big that for every one homeless person living in LA County, there are 4 empty units. 4 for every one homeless person. And there's roughly 44,000 homeless people in LA County, Alameda County, Orange County areas. Now, how much of it is in Australia? Like, how much homelessness, if you're going to give it a ratio to that? I don't see the homelessness that big in Australia yet, but I do see a couple of tent cities sprouting up here and there on the news. I do see, people protesting outside Parliament buildings. I see that. But are you having a major homeless issue there yet, or is it still kind of under control?
I don't think it's under control, but it's not well reported here. The media don't often report it. And, I live in a regional area, right? There are a couple of people who sleep by the bus shelter around the corner, right? So even in regional areas, we are seeing some evidence of people being displaced. And there was an initiative as part of the response to the virus to try and actually house short term some of those homeless people, right? Now, what happens now is the interesting question, right? So I think that this is an issue that is not actually adequately being talked about. Some of the lobby groups are quite vocal, but they don't get much time. And in terms of the statistics around it, it's quite hard to get hold of it because when the census is done, right, the census is done on an address.
Okay.
Right?
Right.
So by definition, if you're not in a fixed address, you're not in the census. So I don't think we know what the true story about homelessness is in Australia.
Well, because we got reports from Dublin, Ireland, they're pushing to 14,000 people sleeping rough, and 4,000 of that is children, and that is a very scary, Terry situation. It's just the heavy dependence on foreign money as now starting to show its true colors, that now with restriction and less foreign investing, and now that China was a year and a half ago putting caps on capital flows leaving China because China was seeing a massive runoff on wealth, and they had to put a stop to that. Now, what's happening here in Canada, Mr. North, is they're trying to ask people, asking expats from China that are living in Canada, for example, saying, how much did you take out of China? Oh, I only took out $5,000. Okay, but we're going to tax you on the house you own there for $3 million, the bungalow you bought. We're going to tax you on your vehicles. So the Chinese government now is taking the assets, per se, and taxing them on that instead of taking their word on how much money left the country. So do you think money is going to be returned to China? Do you see people selling off assets to return money to China? Because that's something that's been discussed a few times.
Yeah, well, we are certainly seeing a number of buyers from China who committed off the plan, right, and paid the 10%, but never complete, right? Okay. So that's already happening. So in other words, they're prepared to walk away with the 10%, just forget about it, right? And it's hard to follow them back to China. We're seeing that. We also know that there is some sign in some areas of people now putting property on the market because of the demands back in China. But I think more importantly, the forward inquiries from China for Australian property have dropped significantly. And it's interesting, again, going back to this media thing, they were saying, oh, well, Hong Kong will save it, right? There'll be lots and lots of people from Hong Kong who will come and live in Australia because of what's happening in Hong Kong. I'm very unconvinced that that's true. I don't think we're going to see a large number at all. So I think that we have a significant issue in terms of that was a very important factor, not the only factor I said earlier on, but an important factor in terms of the driver of the property sector, but it's reversing now. And how strongly it reverses rather depends on what China does more broadly with the relationship between Australia and China, I think.
So they're on shaky ground. I know I've been watching the disputes back and forth, and let me ask you a semi-technical question. How much of Australia does China own? Because I know that the property, the water privatizations, you have all kinds of mines. You got, I could tell you, for example, in Canada, our biggest coal mine is owned by China and with no Canadian hires. We sold 2 of our biggest gold mines. We sold the 1 gold mine that we have here in northeastern Canada, and we sold a gold mine that we owned in Colombia. And then Canada sold a lot of its major interests. And I've even heard, I know this is through the grapevine, that China might even buy our railway system, our entire rail system. Now, it's happened in parts of Africa. China tried to buy. I was speaking to one of the Chamber of Commerce member of the Chamber of Commerce from São Paulo, Brazil, and he told me that China was trying to buy the electric company there. So, how much has China infiltrated into Australia, in your opinion? Never mind housing, but
yeah, I mean, I don't think it's as high as many people claim. And in fact, if you look at the official statistics, in fact, the US and other European countries are way ahead. I think China's about 8th down the list, right, in terms of the assets owned. So, yeah, I don't think it's anything like as big as people initially would think. First point. Second point is that there is now a real awareness of the political infiltration and influence of China into Australia. And in fact, some people have been writing about that quite strongly, suggesting that we should be just a little bit more cautious about some of the relationships that are being built. But thirdly, the economic relationship, which of course was remarkably strong. I mean, Australia has totally, linked itself to China in terms of trade. That is where the tension now is. And in fact, in some areas, like, for example, in wine, where now China's asking for an inquiry and other things too, we're seeing more and more examples where China's saying, well, we're not sure we want to buy that anymore. They're still buying iron ore, which, of course, is part of their strategy to sort of build their way out of the
Well, that's a war
the current
machine.
crisis.
Major ingredient in building a war machine is iron ore, right?
Well, or houses or bridges, and they seem to be building more bridges and houses to nowhere. But yeah, in terms of actually trying to get a handle on how much is really tough. They've just changed the way that the register works here. So now smaller holdings from foreign countries are being recorded. So perhaps we'll get more data ahead. I think the truth is nobody really knows. There's a lot of gossip. There's lots of opinion. But the official statistics would definitely say it's not the number one issue.
Okay. All right. I was just kind of concerned about that because I remember during your wildfires back then, they were having problems with water because it's all privatized or it's outsourced or
So there's definitely a couple of big areas where farms have been bought by foreign hands and they've got big water stocks. I agree, but in the scheme of things, I just don't think it's as a bigger issue as some would perhaps play it up.
Okay. All right. So I'm just trying to think if there's anything. Anybody have any questions for Mr. North here? I have a lot of people here. Wow, the comments are going pretty fast. Let's see if we have any questions. Come on, guys. I know there's about an 11 second lag between us and this transmission, Mr. North. So they're just hearing me say it right now.
That's fine. I understand. I do my own line streams too, so I'm quite used to the.
Let me do a quick channel
YouTube
plug.
delay.
Let me do a quick channel plug if that's okay, Mr. North.
Sure.
Okay, guys. So, guys, here it is. Let's go to trends in the housing market here. Let's go to article scan. Guys, don't forget, I'm going to put a link in the comments here. Please do not forget to subscribe to Martin North here, Digital Finance Analytics. Here you go. This is the link to his channel. Guys, I'm going to leave you the link. I need you guys to please go ahead and subscribe to his channel. Go there right now and do it. And here is his blog, the Digital Finance and Analytics blog. And Martin North is a YouTuber like myself that could be easily contacted, which is really nice. You could just contact him if there's anything. You could subscribe to his email and all that stuff. So that's really nice too. Yeah, I wanted to throw that plug out there for Mr. North, who is on the show. How you feeling? Are you still okay? Have we still got you here or what?
Yeah, I'm still here.
Yeah. Yeah. You're not tired? You're okay?
Yeah. Yeah. I don't know quite how much more you want to do, but I'm okay for a few more minutes. But maybe we should close it off in a little while, hey?
Okay, we've got Anna Key here. She's from Australia here. She's asking, ask Martin about the 10 times cost increase for imports.
Oh, imports of what? I wonder what she's referring to. I'm not sure I know which specific imports she's talking about. So we know that there have been some significant price rises because, of course, the exchange rates moved, right? So we were down at 50. We're now up at 70. And there's a big debate about whether the dollar will go higher or lower. That, of course, is having a deflationary impact rather than an inflationary impact because of what's happening there. But I'm not quite sure what she's talking about the 10 times. Sorry.
Okay. Blunt News is asking, question, Mike, is it possible all the COVID money gives us another big economic inflation before the public catches on?
Well, to an extent. But like I said, the stimulus is being removed, right? So the question is how much more stimulus will be thrown. Let's see what happens in the budget in a couple of weeks' time, whether they will continue the stimulus. They probably should. But remember that the quantum is remarkable that they've thrown in already, and they're now talking about withdrawing it. So my own view is that whilst they will talk about all this policy stuff and stimulus, the net effect probably is less stimulatory than many would expect.
Okay, Mr. North, we got Nitin asking, any safe investments in the current market?
There's no such thing as a safe investment. It's all relative risks, right? Okay. So whether you go gold or whether you go silver or whether you go deposits or whether you go stocks or property, it's all about relative risks. There is no such thing as a safe haven.
Okay. We got where's it? Mitch Madden from Portland, Oregon asking stamp duty status.
Yeah, stamp duty is still paid. They've sort of lifted the floor in a few areas to try and accommodate it. There's a big discussion as to whether stamp duty should be replaced by a land tax, which basically, of course, then change it from a transaction-related thing to a longer-term set of taxes. There is some building consensus that makes sense because it would reduce the friction of buying and selling houses. But guess who's advocating it? The real estate sector. I'm more skeptical. The other point is the real estate stamp duty supports the state's funding, and none of the states have explained to me how they'd fill that funding with the same amount of money without massive hikes of taxes elsewhere. So it's probably one of those aspirational changes rather than anything else.
We have, hold on, then we got Lord Humongous from Denver, Colorado is asking, ask him how the lockdowns are affecting him.
Well, I'm in regional New South Wales, so I've been quite fortunate. I haven't been up to Sydney for months. Locally, we've had some closures, some reopen. I tend to go out during the day when it's quiet, like when I go to the shop early and those sorts of things. But it really has changed the way that I do things. I do a lot more things virtually. I do a lot more things, like this, for example. And we're getting more home delivery stuff. My wife is quite unwell, so basically it's quite important that we actually try and insulate ourselves as far as we can from the from the thing. So that's the way it's worked. But I tell you, it's much better being in regional New South Wales. I wouldn't go to Sydney at the moment.
Okay, Anna Key saying all shipping containers in Sydney wharfs have gone up 10 times this year. That's what she meant.
Oh, okay. Didn't know that. Sorry. Can't comment. I'll do some investigation and perhaps even make a comment on my own show.
Steve the Plumber's asking from Toronto, Ontario, I would like Mr. North to comment on how he sees the Canadian real estate market as a whole with respect to house prices declining or rising. Lately, in the major cities here in Canada, our house prices went up 7% during all this fiasco. So
Well, I remember I've had a few conversations with people over in Canada, and there are many similarities between what's happened there and here. Your recent price rise is not totally surprising, I think, but is it sustainable? I question whether it is.
No, because
No.
again, the middle class, there's no more middle class getting into the market. The province of British Columbia is having a really tough time finding any first-time home buyers at all. They're so dependent on foreign investing, and the last tower that we had, a major tower that we built, if you wanted to buy it, you would have to go to Shanghai to see the viewing, because they had the release for it and the model on the table and the rooms set out and different pictures, and you had to go to Shanghai to buy it. You couldn't buy it in Vancouver, even though it was in Vancouver. Okay, we got Charles Owen asking, should the central banks be allowed to buy mortgage-backed securities?
Should the central banks be supporting the banking system? My own view is central banks have lost the plot completely. And the sooner we get rid of central banks, the better. They are, in my mind, not actually supporting the right strategies. They are actually perpetuating the debt cycle and the debt machine to the extent that they continue to buy back mortgage securities or other types of bonds. They're perpetuating a system which has proven itself not to be successful. I think it's time for a fundamental rethink about how our financial system operates, who controls it, and who makes those calls. Central banks around the world, the cabal of central banks, are all caught in this same way of thinking about, and I just define madness and insanity, is to do the same thing again and again and again and expect a different result. That's precisely what they've done. They won't get a different result. They will continue to inflate the amount of money in circulation. They will continue to just do more QE, but it won't solve the fundamental structural issues we have.
We have, hold on, Anna Key's asking, when can I look forward to buying property?
Depends. At some point, I do believe that prices in Australia will come back. It'll be a slow grind. It will be a 3 to 4 year thing. So, I've said to a few people, just take it easy, just relax. Don't think I'm going to miss out if I don't buy now. Right? I think that later prices will be more affordable. That said, if you're an owner-occupier purchaser and you see exactly the right property in exactly the right place and it makes economic sense,
total debt service ratio fits. You're not gonna. Ray Meritus is asking, housing will just increase or fall less by the stamp duty quantum if that gets taken away.
Correct. That's exactly right. It's a bit like the stimulus thing, right? If you take the stamp duty away, prices will go up by the amount. Exactly. It's a zero-sum game. I agree.
Mike Martins asked Mr. Martin North, in terms of money, I have family that is on a disability pension. Do government have the right to stop her payments if she doesn't take the vaccines? That's an off-topic one. That's a Mike in the Night question.
I mean, it is a civil rights question, and there was a interesting misspeak that our Prime Minister did, that he rather suggested it might be imposed. I think he's walked that back now, so I suspect probably not. Well,
but it's already been addressed, and they're going to readdress it in a different form of language, and they're going to rediscuss it and bring it across the floor one more time. And then 2 years later, what? We told you this 2 years ago. You know what I'm saying?
That's how politics works.
Yes, Mr. North. Okay. I really appreciate you taking the time to come on Trends in the Housing Market. This is our 215th episode. Mr. North, I really appreciate your time, and I really appreciate talking to you. I really appreciate you giving us your analytics, your analytical backing on what's going on, and it means a lot to us here on this channel.
Well, I've enjoyed speaking with you today, and hi to you. Congratulations on that amazing number. That's good, and nice to meet everybody on your channel too. And come across and see us on Walk the World. We do somewhat similar stuff, and it's such an interesting time to be across all of this. Lots of decisions ahead, and it's really important that we advocate for the right outcomes for ordinary people, not just for the central bankers.
Okay, Mr. North. Hopefully we'll get him on Mike in the Night, and we could go into the whole banking conspiracy and get him on the show, and maybe get some guys from Colorado and a couple of guys in from Florida to ask, formulate some good questions. You know what I'm saying? All right, Mr. North, thank you so much, and God bless.
Take care.
Good
to
night.
Speak with you. Night.